Good evening, everyone. I hope I am audible. Okay, great. Thank you. This is last session for the two-day conference, and I will try to finish it on time so that everyone can go home on time. We are talking about value addition through internal audit. So, before getting into, I will present some case studies as well. Let's talk about certain basics of internal audit, starting with the definition. So, this is a very, interesting subject, value addition through internal audit. And why does it come? So, if you look at standards on internal audit today, the preface to internal audit standard talks about internal audit and what is internal audit. It says it is an independent management function. Very important, word here is management function. So it is not an external function, it is part of the management. So whatever internal auditor does is something which is required by the management, which involves a continuous and critical appraisal of functioning of an entity. So when you look at it, what you are trying to do is, you are trying to critically appraise functions within the organization. If something is designed in a particular way, is it functioning accordingly or not? If there are gaps, you need to identify gaps. If there are opportunities, you need to communicate the same. If you feel certain things are happening better in certain other organization and that can be implemented here, you can bring it here, although there is no deficiency in the existing processes. And suggest improvement and add value to strengthen the overall governance mechanism. Now, add value is something which is added in the definition itself. If I have to ask, from the people who are attending the conference and my colleagues and experienced, mentors who are sitting here, what is value addition according to you? If anyone can answer, that will be good to start. Great, sir. Anyone else?
So you get something more than what you had. So if you're doing something in a particular manner, you come in and the recipient.
So you are saying process improvement.
Yeah, he gets more.
Okay. Okay.
Something increases.
Okay. So you are talking about return on investment. Okay. 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 Yeah, please, sir. Great, sir. I think good answer. I think we'll just move ahead. I will go to the next slide. And the definition also talks about basically improving risk management and internal control structure, which are all given. So we'll focus more on the value addition today. So these are certain aspects of value addition. When you talk to different people, and I think answers have come from all of you, we are talking about looking at emerging risk and mitigation. So when you see insight and foresight as to what do you know and what do you foresee coming in future, how do you help organization in identify those risks and help them in mitigating it? Adherence to law and policies. This was something which was very critical in earlier time. So internal auditor were expected to comply with the regulation and come and tell if there are non-compliances, and that was a very major role in past. Enhance process improvement and cost saving opportunities. So as madam said about return on investment. So if client is paying you certain amount, they expect that you give them 2 times, 3 times return. And that is very important. So if you have to, end of the day, go back to your client and tell them that, okay, I mean, I have done well, they will ask the question, how? How are you saying that you have done well? Now this is a quantifiable measure which helps you, not possible in all the cases, let me just say that. Because in many cases your scope is such that you can only talk about compliances. There you may not be able to justify it, or if you go to banking, financial services, again you may not be in a position to provide a quantifiable value in most of the cases. Provide recommendation for management decision. So basically you are an extended arm of management. So how do you help them take a decision? Now they are doing, let's say, outsourcing. Now when you do the review of function, when you look at the data, you look at the process, can you go back and tell them that, okay, outsourcing function is doing well, but this is activity being done by some of your units internally more efficient? Maybe that can add a lot of value for them. Align operations with organization goal. So if management is expecting something, if they want to go in a particular way, we need to actually align with that, because we are also part of the management. So if they want, let's say, to grow at a particular pace, you can't come and say that, okay, I mean, you have to stop these activities. You have to help them basically by putting in controls which can mitigate the risk. But you cannot say that these are risk and you cannot get into these areas. And if you have to do a value addition, this is just certain aspects which you need to do. Business understanding, most critical. Unless you understand business, you can't do any value addition. Over past years, I have, and most of us would have worked across organizations. The business of one company is totally different from other. Within same sector, if we work for 2 different companies, depending on what they do, what are their processes, what are their clients, the processes will be completely different. So it is very important to understand the client business. Once you understand the client business, you will be in a position to say as to what is it which will work in this client, what is it which will not work. And you can think about what value addition needs to be done at a client place. Policies and procedures of the organization, very important to understand it, more from a compliance perspective, to see if their policies and procedures are in line with the processes which have been defined. If there are gaps, again you have to go back to management, say that your policies have so and so gaps. And if those gaps have resulted in certain leakages for them, you also need to identify and inform them.
You have to do the peer review and say, okay, your B is saving only 8 rupees, you are saying 16 rupees. How can you survive? How can you survive? How long you will sustain? 10 years or 5 years or 15 days? See, that question you have to drop to him and say, okay, are you in a position to survive or you are there to sing? So this is a peer review can only tell him, okay, look, gentlemen, you are 24,000.
So I think sir was trying to say about comparison, which is very, very important when you look at either internally or external data. Next is gain understanding of technology platforms. So every organization is working on tech systems today. So important for us to be tech savvy. If we have to analyze data, I mean, it's not possible. I mean, although Excel has 1 million rows today which can be used, but unless you use data analytics platform, you may not be able to review the data in a way which helps client in value addition. So otherwise the team will be totally into Excel, trying and doing things which were done years back. I think everyone from the lowest level of employees in the internal audit need to learn the technology, need to understand what is it which will work for the client, and along with technology, data analytics is very important piece. If you want to give any value addition, any cost reduction exercise an organization takes place, data analytics plays a very important role. You have to segregate all the activities in different parts and then understand where is it which I can improve and I can add value. And then help in implementation. As internal auditors, you come, you give a suggestion, you ask client to implement and then move out. In many cases it doesn't work. So how do you support? You may need to offer them implementation support. So help them saying that, okay, I mean, if this is a suggestion which we have given, we can work along with you to get it implemented. I mean, we keep talking about 3 line of defense and wherein we are the 3rd line. Those are not the days which we can actually go by those rules. It may be very valid for probably banking systems because regulations and all are designed in such a way. But in regular manufacturing organization or other organizations, we will have to somewhere think about the organization and just not think that we are auditors. We have to go beyond that. We'll have to see how, if we are telling them that, okay, you need to implement this system, is it implementable? If yes, work with them, help them, guide them in doing it. This is just same thing. Slightly, we have added certain aspects here. When we do internal audit, one is understanding of organization objective becomes very critical. Wherein we understand organization objective, what is the pain point which a company has. So if you understand, I mean, if you communicate with the people, not only at the top management level, even at the soft floor, if you go, you are taking a round, if you talk to them, they may give you insight which will be helpful for the audits. So try and communicate and understand where you can get specific information which will be helpful. Prepare a risk-based audit plan, basically a SWOT analysis in internal audit. Whenever we do the audit, either at an organization level or for a particular process, do a SWOT analysis. Typically used while we select the stocks. I think even in internal audit, it becomes very critical that you understand what is the strength and weakness of that particular process in that organization. So have a discussion with process owners, get an understanding from them, and they will give you a lot of insight in terms of what is it which is working well in that company, what is it which lacks, and where are the opportunities according to them, because they might also have come from different places. They may have constraint in terms of taking it to their senior management, or their senior management may not want to do certain things. If you go and talk to them, try and get an understanding, they will be very helpful. They will in fact be helping you, and they would like to get those things implemented which will ultimately help the organization. Process efficiency, governance, we spoke about, support, innovation and challenge. So digitization, new product. So here we work with the company, we work with the organization on how new technology can be added and how we can support them. So if let's say certain things has to be done, what impact it can do to your business, let's work with them, get them, understand those issues which may be there. Continuous learning, best practices, regulatory changes. Again, important aspect, you have to keep yourself updated as to what changes are happening in your own environment, and build relationship and trust. So if you want to have, as an internal auditor, a long stint in the organization, either as an employee or as a service provider, you need to build that relationship wherein they trust you and they come to you if they want to get something changed or create some value for the organization. Anyone wants to add, please feel free. we'll just go into case study after this.
Just one thing.
Yeah.
Before the audit, look at all your working papers, talk to X people who have done those areas in the past. This area, I feel, gets neglected. What has happened? What are the open points? Was a point raised? Incorrectly closed issues? So, process reports. So, before you enter, just do a deep dive.
Yes, so that process understanding is something which is critical, and we have just used it here. Sorry. Pain points and all, when you talk to people, you will get that information actually, and it's very critical. I mean, in past, if that area has been done, I mean, you may get some insight, don't depend on that, but it will be on the back of your mind that these issues have happened. Specifically, if there are companies where some frauds and all have happened in past, it becomes very critical that we have that insight with us.
Sir, I think my personal experience is what you get from the shop floor worker. What he can give the input, not even a big man can give. Because he knows what are the limitations. Where is the machine wrongly placed? Where it is wrongly stated? Why it has to take 5 rounds? Why the material has to take 500 meters extra round? See, he can tell you so many things, provided you go there and sit with him and say, okay, what do you want? See, he will give you the better solutions and better answers because he faces the problem and he is subject to that kind of harassment.
I completely agree, sir, and my first case study is related to that. So we'll come to that. This is basically a chemical manufacturing company, and so we had a scope to do the entire internal audit of the company, and in that particular review, our scope was basically review the manufacturing processes, look at the material consumption, look at actual versus standard consumption and do an analysis of that, and then look at manufacturing process compliance. Now, we went through the entire process, we went through the SOP of the company, we spoke to the process owners, we spoke to the CFO, we understood what all are happening, how it is happening. We created our own understanding of the process, process maps, and when we did the analysis from a process angle, when we go as an auditor, we basically look at how things has to happen and how it is happening. So, material consumption standard versus actual was perfectly matching. There was no issue with that. All receipt issues which had to be recorded were recorded.
Because standards were set so low that they are easily achievable.
Yeah, physical verification, there was no major variance. We did all that, and then what we did is, as a process, we said let's go for a manufacturing process, see how plant is working. So we went there and we took a supervisor from the shop floor who was taking us through the entire plant. And when we did the review, we saw at many places fumes were coming out. I mean, in the manufacturing belt which was there. So it was like the belt was closed, at certain places it was open. Now we saw that at many times, and we thought, I mean, let's understand what it is. So we spoke to the people there who were working at those machines, and they said this has to be open because they have to add material there which were excipients to manufacture. And when they were adding through that particular place, and they had kept it open because they have to add additives or excipients there. We understood, and then we said, but what is it which is, I mean, going out? I mean, so evaporation, what is happening? So they said these are excipients, so they will evaporate when you put in. And Then we understood from them, we actually then spoke to the supervisor, we tried to understand why it is happening. And then we were told that no, it can be reduced, and it can be reduced to a great extent, but they don't have budget. These are not capex. It has not been planned in capex. So we actually then went back, we tried to understand who can do these kind of, so if they have to have the closure at those machine lines, who can work on it? They say it's a huge capex. I mean, we are not going to get approval of it. We got quotes. We in fact contacted their own suppliers who were working with them. And when we got the quotes, the total excipients loss which was there per annum was about 5 crore. And for entire plant, the closure cost, closing those lines was somewhere around 1.5 to 1.7. It was just 4 months. Only thing is, no one applied their mind, and they did not took initiative. People at plant level, they did not have that much insight that, okay, this can have so much cost implication for the company. So, very important, and these things, people sitting in probably office or head office, they are not even aware that something of this can happen. It is at a plant. When you visit, when you interact with people, you get insight which can help you add value. Any question here? Sorry. Yeah, please. This was actually excipients, which was additive. They had not defined that. No. So they have a regular raw material which they had used, and these were added in that, and this was like, it should be, but it was not there at all. Yeah. Yeah, but you have something called consumables in manufacturing industry. Yeah. So when things go in the consumable, you will also miss it. Yeah. And that is why it got implemented immediately. So we'll go to next case study. This is for a OEM, auto manufacturing company. And here we actually were doing plant review. And this was a global company, so their global audit team was also in India, and we were working along with the global audit team, where we had to review manufacturing operations, quality review, material movement. So these were all part of our review. And typically what happens is you have inventory level defined in manufacturing companies. So they have also defined inventory levels. Inventory was maintained within those levels. They had a just-in-time kind of concept. So all the material which were used for production were received in time. So they have to give schedule to suppliers so that material comes as per the time when they will require it. And so all these were matching, no issues. But while we were actually coming and going out of the plant, we saw queue of trucks on the highway. I mean, probably for about a kilometer. And it was just an inquisite as to why so many trucks are standing on the highway. So we actually went to one of the truck drivers to check कि इसमें है क्या. They said this material is for this plant. And they were all waiting outside. So what was happening is, they had actually not inverted all those materials, so all their inventory level were perfect. There were no issues. They used to tell the supplier when to send the truck inside, although truck is standing outside. And all their norms, everything was perfect. And it was a global company, so no one cared too much about it. So then we said, okay, this is an issue. And the management just denied. They say, no, the rates have been agreed with the supplier and we are not paying them extra. So how does it become an issue for us? Let them stand outside, doesn't matter. But if you look at typically in an industry, if a vendor is supplying you something and if he is incurring costs, truck holding charges, it has to be included in your cost of material. So we said no, it's not acceptable to us. So the issue was escalated, and in that particular company, it was a US base, and head of corporate audit was sitting in Australia. So issue got escalated to her first, and then she flew down to India to understand what is the issue, that auditors are not agreeing to what management is saying. She came in here, she understood it, and then in fact we sent a report to the US, and once US got the report, they actually sent 2-3 guys from US supply chain team to India to basically streamline the entire process of procurement to negotiation, everything, and streamline this entire activity. So this is basically when you keep your eyes and ears open when you are doing the audit. It's not something which you will get if you are just trying to look at what is there in the books, what is there in the soft law. This is something which was outside the plant. It is just an application of mind, a common sense which we try and say. So if you use common sense in audit, you will be able to identify issues which is difficult to understand. Anyone has any question? Please go ahead, or will. Yes. This leads to subsequent reduction in cost about 4 to 5% for material cost. Yes, it was a huge amount. Next, it's a infra company example. This was basically, I will say this was a senior management fraud. So this company, we were appointed as auditor by the investor, which was a private equity, and we were doing audit for them. So while doing the audit, they used to have a lot of inventory at site and all. And they had a process wherein they used to get inventory verification done and all those were perfectly fine. They also had material consumption and all, which was getting reviewed, and they used to prepare it at all the sites. There were variances in that, but nothing which was very high. Now, nothing was getting exposed. Also, because typically what happens is in infra, you have site which goes on for years. Until certain period of time, whatever is BOQ, the material which you consume will be within the BOQ quantity. So you may not be able to actually understand if some extra material has been consumed as well.
While choosing the targets, they manipulate or they play with the targets.
See, it is again, I think what is critical here is business understanding. You have to understand what business company is into and how it is there. This company was into hydroelectric dam, so they were doing construction of hydroelectric dam. which is typically at a very high altitudes, and you will not have very high capacity trucks and vehicles going there. So when we did these reviews, we noted that 40 metric tons trucks they have shown in their receipts, LR receipt, lorry receipt for 40 metric ton trucks which were going, which was not possible in those areas. They cannot even go. Then we looked at the challan serial numbers. Those were all coming one after the other. We went back and then started looking at vehicle number used on the challans. And we noted that sometime the same vehicle was used for 16 metric ton, then 40 metric ton. And we went a step further. We tried to identify through RTO in terms of where these vehicles are, what is this vehicle? And in certain cases we got that these were like motorcycles, the registration number. Okay. Now, they have done all these so that, they can conceal these facts. And then in another project, which was a road project, they had huge steel consumption which were there, and which was not there in the BOQ also, because there were not too many bridges which were to be constructed. And this entire, the value in these cases was about 20 to 25 crore, which was the difference. And so we actually went back and we discussed with the management. Obviously management said, no, these are all incorrect. So we went to the investor, and then investor and we had a meeting, but ultimately investor, nothing much could be done because it was a politically connected promoters were there. The idea to put it here is all these things. So when they manipulate the documents, the people who are manipulating it, they may not be able to foolproof it. So if you try and look at it, there are a lot of gaps which you can identify from those.
Like you said, motorcycle numbers are used for 22.
Yeah. Yes. Yeah. So in these cases, we recommended that, they need to initiate recovery and all, and then started monitoring. So what they did is, they sacked the entire team which was there in finance. They got, investors got their own guy as a finance controller after this incident. And they started monitoring day-to-day activity in the company. So they kind of took a joint control. Should we move to next? Yeah. Okay. Sorry. I think there is a duplication, so I will move to next. Sorry. Okay. This is for a telecom company. We were looking at entire capital expenditure and fixed asset for them. So company had invested a lot in their office space, so renovation of office and all. And all the vendor selection documents in place, they have obtained multiple quotes. Those were all documented, all managed nicely. The relevant people in the organization have certified that, okay, this work has been done, and based on those certification, the payments were issued. When we looked closer and started getting deeper into the vendors, we realized that in many cases there were connected vendors. You had same addresses, you had similar details there. And then we went into company's employee database to understand if there are similar names. We started matching through surnames first and then all. And what we noted is that many of the vendors were actually connected with the promoter there. So one of the promoters which was involved in this, we sent our teams to the locations to understand if this location exists. So people went, these were like, this is not for tower, this is for office this which they were building. And vendors we could not find. So when we went to vendor, these were like a tailor shop or something like that. We could not find the vendor who had supplied the materials. So we, again, this was through an investor, we had to report back to them. There are multiple promoters there, so one of the promoters was removed who was involved in this particular case. And one of the major trigger point was the renovation cost was very high. So if you look at the per square feet cost, it was coming at more than the cost when you buy a particular space. And it started from there. And then ultimately we were able to provide all these details, and then he was asked to move out. Although he had stake in the company, but he was moved out from his execution role. Sorry, I'm taking different type of examples just to show the kind of issues which we have noted. So some of them are related to fraud, some are operational efficiency related issues. So this one is for a pharma company where we were actually did a supply chain review. And the idea, when we were appointed, the idea which they wanted to reduce the overall supply chain cost. So they said, we want you to do a complete review and come out with a suggestion if there are possibilities to reduce the cost. Now, agreement and all were fine, payment was being made appropriately. When we did the review, and it was more a efficiency issue in the company. So the company was basically, they were using, so if let's say, Chandigarh, and Chandigarh was kind of a hub for them from where they used to send the material. So if let's say something has to go from Chandigarh to Indore, then we look at the entire data to understand how many trips were there, what was the volume of material which was moved through that. And then we noted that in the same routes, they had sent material multiple times during the same day or alternate days. Then we had a discussion with supply chain head, and we understood that this could have been combined, but it was more like for them that, okay, they have to send material faster, so they have just used the, taken the truck and send the material. So basically they have incurred extra cost. And then in many cases they have used the air without, and we compared that with the orders, and we noted that in many cases they did not had confirmed orders in place, and many of these materials were still lying in the warehouse. So basically they had incurred extra cost, but the material was not even sent to the customer. This overall impact in this case was about 3 to 3.5 crore of the supply chain cost, which got reduced after the review. This example is from a engineering company, a manufacturing. So they were into manufacturing of engine components, and we looked at the procure to pay process, which included vendor development, obtaining quotes, and then placing the orders. While we did the review, in many, what happens is, typically in a manufacturing company, when you do, so you have a material code which are there, and based on material code you place the order. In certain cases they don't create material code, but they use a particular consumable code or one-time code to order the material. Now these many of these cases we noted is that they had used one-time code to order the materials, and we got those invoices to understand as to what these materials were, what were the description. In certain cases, like they used to purchase the bearings. Now if you, and they had multiple vendors which were approved for bearings, from local vendor to something like SKF and all, and there were huge price differences of the same category of bearing which was being purchased. We were told that these we had to do because these are proprietary materials, so we had to buy it at that particular price. When we went to the quality, they said no, we have approved these vendors and you can buy these materials from others as well. So those instances then were reported, and they had created for many of those materials separate codes going forward. And we also recommended not to use one-time code if you are procuring material more than twice in a year, same kind of material, and started monitoring of one-time code. Impact here would have been about 50 to 60 lakh rupees, which was a saving which organization got. We also told them to look at justification for price difference, because in many cases even in the regular purchase there were price differences, and the share of different vendors were not defined. So if you have L1, L2, typically what happens is, to ensure that your manufacturing is not hampered, you will buy from others also, so that you have a supply. If there are issues with one vendor, then you don't have dependency and your manufacturing doesn't suffer. But in those cases, a process needs to be defined, and at least share of business has to be defined, so that there is clarity as to why we are buying from a different vendor at a higher price. This example is from a solar manufacturing company. We did a manufacturing review, and while we perform the review, typically you have brackets. So solar panels, you have to put brackets, and on top of it solar panel comes. So these brackets, so they had a defined threshold in terms of what width and what width and length of bracket has to be used. So while performing the review, and they had a difference of about 1% plus or minus is acceptable. We looked at the invoices from vendor, and we noted that every time the vendor used to supply plus 0.9 plus 1% kind of material. So there was never that it was on a negative side. So manufacturing processes has changed, and basically they need to review to see that, if there is a possibility to optimize the cost. Management disputed, they said no, this is as per our defined norms, and we cannot, so if it is within norms, auditor has no role to play. We disagreed, we went to the board with these issues, because impact here was about 3 to 4 crore of cost saving. Board in fact directed the management to lower the threshold, because the precision in manufacturing is much more, so you don't have to go with the higher threshold level. So those threshold got reduced, and company was able to save money on that basis. So certain case, it is like sometimes you have to go back, you have to challenge the management. It is so if we just go and say that, okay, I mean, this is a defined process, this standard has been defined. So as an auditor, we go verify, look at that standard. Can we go and question that? I think many of these things comes out when you try to question as to why these things are there. Can we improve it? I hope everyone is with me right now. Okay. Any questions? Yeah, please. Yeah.
Uh, so my question is, you mentioned about 2, 3 fraudulent cases. So in addition to reporting to the management, do we need to report to the regulator as well, or is there any?
See, I think to my understanding, I may be wrong. Sorry. If you are internal auditor under 138, then probably my answer is yes. But when you are working for the management or the investor, I mean, you are basically a part of the management. It is their responsibility to report if anything goes wrong. Because not necessarily you have to be a chartered accountant to do these activities.
Okay, thank you.
Thank you. Yep. This is a very, I mean, typically many of us work for MSMEs, and this example I have just put it from that point of view. So we were doing review of an MSME which was into GIS mapping, which is basically for a particular location what kind of development and all are happening. That gets reported to the authority, and typically a lot of these work are for US and European governments which outsource the work. Now this particular company is an MSME segment which was doing this work, and they had so when we did the review, they had a cash credit facility with bank which they used to utilize for payments and all, and they had a current account. They actually did not do SWIFT transfer and all, so those were not done. So at any particular point in time, there were balances lying in cash credit, I mean in current, and they were paying interest in the cash credit account. So which was a loss for the company which could have been avoided. So in this particular instance, probably 30-40 lakh was annual loss which that company was doing, but that was a significant amount for them. Okay, this for a textile manufacturing company, and we were doing material and procurement review here. So that company typically does a procurement based of bill of material which was defined in the system. When we did the review, we noted that there were a huge variance in terms of what kind of material they were ordering, what was the consumption, and what is specified in the BOM. And they had SAP. So what used to happen is they, based on the demand which comes from the merchandising team, they simply put it in the system, and SAP generates order and place it on the vendors. Now we looked at it, and then what we saw is that there was a lot of material which was getting piled up at the plant. And we further went into detail, and we noted that over a period of time, the wastage percentage has come down. They had not reviewed that. So their BOM was not updated, and which resulted in certain cases, they have in fact even replaced the materials. So the extra material which they needed, they used to order outside of bill of material, and they had their inventory has gone up more than 100 crore, and which included about 65 to 70% slow moving materials which were lying in the plant. So we actually they had to then do a bomb review to ensure that extra material is not being ordered. Anyone, any question? Okay. This is for auto component company procurement review, and we did procurement review and manufacturing operation. Typically in auto component you have a very thin margin, so they operate on a 6 to 7% kind of margin because there is huge volume from the OEM, and for every for an auto component the development cycle is very long. So once, let's say, a car model is getting designed, the components designing and selection of vendor happens at that particular point in time. So it's a long cycle, and at that stage they select who are the auto component companies who are going to manufacture for them. Those design gets finalized, and based on that design they actually start supplying. So, and in many cases the arrangement is such that number of cars they produce, the company gets paid on that basis, or number of motorcycles gets produced, payment is being done on that basis. So so auto company is not getting into much detail because they know that if I have 2 mirrors, one left, one right in a car, then I will require 2 mirrors. So they will pay based on whatever car they have manufactured. Now for these auto component companies, if there are, let's say, design changes which happen after initial car launch, those design changes may result in the financial cost for them. Now in this particular company, and this was basically a subsidiary of an Indian large automotive company, and these operations were in Europe. So these we were doing it for Germany, the review, and they actually never went back to the auto company for any changes which happened, and it had huge implication, and also they had not defined share of business and all for their vendors. But I mean, you can consider that fine, this is a cultural issue that we do it, they don't do it. But this price impact was huge, and it was roughly like more than 50% of their component underwent changes which they did not went back, and their the companies they were supplying to were like Mercedes and Audis and all. And the owner of this Indian group also went with us to have a discussion there, and so we actually looked at it, we discussed with them, and then we defined process which has to be put in place for this activity. Again, here we actually could not quantify the impact. The reason being, we don't know how much they can get from their customer, because they have to go, they have to negotiate, and then come back and incorporate it in their prices. This also had certain metal components, so metal prices keeps varying, so that has to be considered. Okay, I will move to next. It's a logistic company, and here, so like auto component works in a particular way, so we have to understand their business. Even in logistic, it is important to understand how a logistic company works. Now, typically in a logistic company, uh, you have like you have head office and then you have branches across India, and there are a lot of promises which happens in many businesses. People who are in sales, they go and give promise to the customers. In this case also, the person who has to get a contract from customer at a zonal offices, they promise customer that okay, we'll give you at X particular price, so whatever is difference will come back to you through credit notes and all, and that kind of became a cultural issue in the company. So if they used to bill 100, they used to collect only 75 to 77 rupees from the customer. The rest were passed as a credit note at the end of year. So we actually did a review, and then here what we also did is after the review, and this in this particular case the amount of impact was very high. So if we getting to more than 90% means we are talking about 15-20 crore of additional collection which can come in. So we did one review at head office, we visited the locations, we understand issues, we in fact visited certain customers also, we took all that data, and then we recommended management that you need to have a central team first to streamline the entire process, which we call them a quality control team, which will look at all the invoices and pickups which were happening from the location. So to ensure that whatever receipts or slips we are giving to customers are all accurate, appropriate, and the data is captured correctly for billing. So for example, there are a lot of materials which are volumetric, so which will occupy the large space, but weight will be very low. So if you don't bill them for a volumetric weight, you will actually incur losses. And they were not able to do that because they were not able data was not getting captured from the branches where pickup was happening. So we created a quality control desk which we ran for a year, and then we handed it over to the customer to run it. And we also did a complete reconciliation with most of their customers, and then took a decision to basically decide how much amount needs to be paid. In many cases what happens is impact is maybe 5,000, 10,000 where dispute is, but customer is holding back for invoice of 10 lakhs saying that this 5,000 is a dispute. So even finance cost, if that dispute is there for a 3 months, 6 months, is very high. So we reconciled, we negotiated, we closed with the customer, took an internal approval, and went ahead with that. Sorry, I think any question, please feel free to ask. We have maybe 10 minutes more, or if you have question, we can go through that. I think the presentation will anyway be shared by the WIRC. So if there are any question, we can discuss those, or I can continue with maybe few more case studies. Okay. This again is a auto component company. In fact, this was covered in the earlier slide, so a different company, but same issue wherein design changes happened and they did not go back to customer for price increase. This one is for an agrochemical company. We did subcontractor review. So typically a lot of manufacturing operations get subcontracted by the companies to a smaller vendors. In this particular case, production process got improved over a period of time at a subcontractor place, but input output norms which were defined were not reviewed. So wastage percentage went down, that were not considered. So when they consider the pricing, wastage and then scrap and all needs to be considered. Now scrap was not there in the pricing at all, and scrap was being sold by the subcontractor, and input output norms were not revised, which actually was leading to loss for the company. This particular example, it was auto manufacturing company. Inventory review we did, and we typically talk about high value items, that you need to have better control on high value items. You need to keep it under lock and key. In this case, we learned that audio equipments were there which has to be fitted in cars. So while it was decent value was there, it was not considered high value by the company. So they had kept it in a particular area, and there was shortage. There was huge shortage in the audio equipment when we did the physical verification. We further went to investigate that, and we noted that those are easily sellable in the market. So what used to happen is, they had a boundary wall which was about 5 or 6 feet height. So there were couple of guys on one side, and on the other side they used to just throw out the material for the other guys to pick up, and they used to sell it in the market. And this was kind of you can say fraud, but at a very low level, where low level employees at a plant level, they were actually doing it, and management was not aware, because regular reconciliation was not being done. This is for an agri warehousing company. So you have agri commodities. A lot of companies store that, and based on agri commodity like wheat, rice, cotton, there is also funding which is being done by banks. So agri commodity company warehousing company gives a receipt that, okay, this much tons of cotton for this particular farmer is lying with me. That farmer goes to bank, and then bank gives loan to the farmer based on that warehouse receipt. When bank does it, all that material becomes a collateral for the bank. Now warehousing company acts as a collateral manager for the bank. So they had to ensure that, okay, all these materials are not issued before bank payment is being made, and they get a no objection certificate from the bank for releasing the material. In this arrangement, the warehousing company has to raise invoice on the bank. Now what happens is, typically so they used to raise invoices, the company used to raise invoices, but they were not getting a lot of payments from banks, and the nature of industry was such that there was huge turnover, employee turnover, and all were there. We started understanding the process from them, and what we noted is that the kind of customer they were dealing were different. So for example, PSU banks and private banks, they had different processes. A private bank, all their billing payments were centralized. PSU bank were branch level. So if you want payment, you have to actually raise the invoice at the branch, go to branch and get the payment from them. In most of the cases, they were not doing that. So they had an agreement at HO, so they used to send the invoice to the HO. And they were not getting the payment, and payments were getting stuck. So we actually had to change their entire process basis the nature of the customer. So we defined nature of customer, and based on that, the people will raise the invoices, and then the responsibility was assigned at warehouse managers in case funding is done by the PSU bank, so that they get the invoice and then they go and submit it to bank for the payment. Again, here it was not like company's business which was important. It was important to understand the person who was funding based on the commodity lying with the company. So understanding of business, understanding of the operating environment becomes very critical. So I think this is all from my side as of now. Any questions, please feel free. Yep.
For a very good presentation.
Thank
Sir, all these case study which are non-financial in nature. So what was the team composition you had engaged with?
Good question.
And 2-3 questions I have, I will
Yeah.
ask simultaneously.
So we typically have CAs, MBAs, graduates, engineers also. So in many cases, like we work with power companies, and they have specific requirement that we need engineers to come, and because they will be able to have an understanding of how operations are running there. So these are not purely CAs. These are people from different backgrounds who are actually working with us.
Means they are in-house in your firm, or as soon as some assignment comes and then you hire engineers?
Depending on volume of work which we have. So if we have a particular kind of volume, then we hire people, or else we have our ecosystem through which we do it.
Means suppose some assignment comes and in-house that person is not there, then you hire someone for that assignment.
Yes.
Something like that.
Yes.
Because what I understand from this case, exceptionally excellent case study, is that we need to understand these businesses equivalent to or better than the owner. Then only we can add the value. So other than CA, we should have some person. Now, had you faced any challenges while providing solution to these owners or businesses, and were all the solutions accepted or something like this?
See, I think most of the cases, if there is value, the solution gets accepted. But there are challenges. So as I said, in that logistic company, we actually then went ahead and we took another assignment from them, wherein we created that entire ecosystem which we handed over to them. So and we did that in many cases, because that is where they get confidence that yes, this is something which can be done. Otherwise, you give your report, they will accept it. Someone will go for the follow-up. They will say, okay, it cannot be done from X, Y, Z reason. If management wants to get done, and if you think there is value in the suggestion which you have given, work with them to implement it.
Thank you. Thank you.
Thank you. I think we are done. So, thank you.